Hello and welcome to the BLSI Business and Economics series. My name is Andreas Wasmuht and I'm the convener for Business and Economics here at the Bath Royal Literary and Scientific Institution. Today's theme is monetary policy and central banks' response to the current COVID crisis. And I'm delighted to have with me Professor Chris Martin from the University of Bath. Hello, Chris.
Hello, good morning.
Good morning. Maybe we should start with you, Chris. Maybe you can give us some background in terms of who you are and what you do at the University of Bath.
Hi. Okay, so I teach up the hill at the university where I've worked for the past 10 years or so. And a large part of my job is teaching both undergraduates and postgraduates, small groups and large groups. And I teach them what I think of as the interesting stuff, big issues about output and unemployment and interest rate, what central banks do and how all of that affects the wider economy.
Okay, no, that's excellent. So you're the right person to talk to today, which is great. Was the UK's and the global community sufficiently prepared for this crisis?
I think if you look at central bankers, surprisingly, I think the answer to that is probably yes, because central bankers had gone through the 2008 financial crisis. And as part of dealing with that, they had developed new tools and new techniques and even new ideas, which they hadn't done before. So although in the kind of period of the 60s and the 70s, central bankers were kind of rather dull and boring people, and it was a dull and boring subject, all about being austere and controlling the economy. 2008 really taught central bankers that they had to embrace a new approach. So lots of things they thought they would never do, they started doing in 2008, so that when the current crisis came along, they already knew and they'd already tried new stuff and they were ready to go.
Right. And how do you think this crisis compares to the 2007-2008 international financial crisis?
I think it's different in scale and I think it's different in type. If we think about the scale, this is a truly global crisis. 2008, 2009, that was more of a crisis that began in certain markets in certain countries and then spread through the financial markets of the rest of the world. Now what we're facing is a problem in the whole world simultaneously. So there's a difference in scale. There's also a difference in the type of problem we're facing. 2007, 2008, 2009 was a problem primarily of financial markets. For various reasons, things went badly wrong in those markets, but fundamentally, there wasn't a problem in the wider economy, what we call the real economy. Now what we're facing is a very different sort of problem. The problem isn't in the banking sector. The problem is in the wider real economy. And so that creates a very special challenge for central banks because central banks don't directly deal with the real economy. They deal with it via the banking sector and they deal with it via the government.
Right. And do we have a comparison at all for something like this in the past economically? I mean, we had the Spanish flu in the early 20th century, but that's the only comparison I can think of. Is there any others that we can think of in terms of the economic impact?
There are earlier pandemics for which we've got partial information, and really we can't really say much about, the Black Death. We know something about the Black Death. We really don't know enough. There were big pandemics in antiquity about which we know a lot from literary sources, but we really economically don't know anything. I think the experience of the Spanish flu is very instructive, and I think there are some lessons we can draw from that. But the important thing to remember is that the economy now is very different from how it was in 1919, 1920, excuse me. The economy, the world is much more unified, is much more globalized. And that really is important to bear in mind when we think about how to go forward.
I mean, how important is the modern connectivity and interactivity of the global economy to things, and how susceptible is it to things like the spread of the virus?
The economy, as we know, is much more connected, much more unified across the world now, and that means that things like supply chains are much more separated, much more dragged out much longer than they used to be. So we've all been following the debates about sourcing PPE at the moment. A lot of that is how do we get extra amounts of PPE from China, from Vietnam, from the Philippines. So understanding those supply chains and understanding what the vulnerabilities are is really tricky, but really important.
Okay. And no, that makes a lot of sense. How would you sort of describe or summarize the government's action in a monetary policy and central bank action in response to the current COVID-19 crisis?
I think the response of the central bank was good in that the response was quick and the response was large. And central banks have shown themselves, apart maybe from the European Central Bank in the early phases, they've shown themselves willing to do things they wouldn't otherwise have considered. If we think about the UK and think about what the central bank is trying to do, there are different aspects to this. First of all, they needed early on to ensure that the financial sector was stable. So in order for any recovery plan, in order for any exit strategy, we at least need the financial system to be secure and sound. And the central bank secured that early on through what they did. They guaranteed cheap funding to the financial system. So we're not getting those concerns, which is good. So we don't need to worry about that. They want, as far as possible, to make sure that lending flows of credit go from the financial sector to the real economy as much as possible. Now, here, things have been less successful. And that's not surprising because central banks have always struggled with this. But central banks want, for example, to make sure that interest rates on mortgages and credit cards, business loans, are as low as possible. And that's tricky for banks because part of the interest rate, one driver of interest rates is risk. Clearly, commercial banks will only lend at a higher interest rate if something is more risky. Clearly, globally, risk has increased quite a lot. So the central bank here is trying to keep interest rates down. They're trying to, as far as they can, reduce risk, but there's only so far they can go on that. But most important of all, really, the role of the central bank at the moment is to support government expenditure. We know, and I'm very pleased that governments have realised early that in terms of the economy, their role is absolutely critical. Only governments can do what's needed at the moment, which is basically make sure that as workers move out of employment temporarily, the jobs are still there for them to go back to, and to ensure that there is enough demand in the economy so that firms find it profitable to re-employ workers. So what we need is large scale, long-term government expenditure. Financing that is very difficult, and that's where the central bank comes in.
Right. I mean, you mentioned interest rates, and obviously the idea to actually keep borrowing to reasonable levels in this crisis. But interest rates really at an all-time low. And so therefore, interest rates in the UK and elsewhere globally aren't really an effective mechanism right now to actually control or engender sort of spending in any way, or are they?
That's a good question. I'd say two things about that. The first is that some interest rates are at an all-time low. Central bank interest rates are at an all-time low. But things like the interest rates that ordinary firms, ordinary households, those are not at all-time lows. So the central bank has a role there, I think, as much as it can. And secondly, yes, it's true. The traditional weapon, the traditional tool in the monetary policy toolbox is interest rates. Interest rates are, from the central bank's end, very, very low. And this is where this is why I said earlier that the experience of 2008 was so important. Central banks have developed in that period a range of other tools. They developed quantitative easing. They developed something called forward guidance. They developed helicopter money. So they have other tools in the box. They've even experimented with negative interest rates. So those alternative tools are there. If we think about QE, quantitative easing, all major central banks have embarked on another round of quantitative easing, but some central banks have shown themselves willing to go further.
Yeah, no, that's very interesting. I mean, some people would say, look, all we seem to be doing at the moment is for the banks, the central banks, to print money, to print themselves out of this crisis. I mean, what would your view be to that kind of comment?
I would agree with that. And at the moment, I'm not at all concerned about that. In fact, I'd say it's absolutely necessary that that is what happens. The unique power, the thing that central banks can do that nobody else can do is, as you say, create money. Now, asking an economist what is money is like asking a physicist what is gravity. A seemingly simple question actually is very complicated, and I spend my working life answering that question. So central banks create money, but they create a very particular sort of money. It's money which is relevant only to the banking system. They don't create money in the sense that you and I experience it. But what they can do is use that power they have to finance the expenditure of government in the short term. And that's kind of what the Central Bank of the UK, the Bank of England, has sort of been doing in a rather cautious way.
Okay, but presumably, although you describe the central bank money as different money to the everyday money, I mean, presumably that money will find itself into the money supply somewhere. And is that a sustainable policy to keep on printing money?
Well, that's interesting. It is often taken for granted that the money created by the central bank will feed its way into the wider money supply. And actually, I don't think that is necessarily the case.
Okay.
What we think of as money is fundamentally credit.
Yeah.
So thinking of money as notes and coins is only really to focus on, say, 2% of what money really is. Money is effectively bank deposits. It's credit. And that's created by commercial banks. And the scale of that is much, much larger than what central banks do. So central bank money is actually very small compared to what you and I think of as money. And I don't think it is actually at all inevitable that the central bank end feeds into the wider money supply. Now, we're all aware of issues. We all remember examples from the Weimar Republic and other cases where central banks printed vast amounts of money. Money ended up losing value. People would steal wheelbarrows and not take the money that was in the wheelbarrow. We all know those stories. Those things occurred when central banks printed huge amounts of money over a long period of time as the main source of government expenditure. Now, we're not talking about that now. We're talking about a temporary, hopefully, policy where central banks in the short term create some money, you give that to the government and use that to finance government expenditure. But that if that was carried on for 10 years, then clearly that would cause a big problem. But we're really not in that situation at all at the moment.
Okay, well, I mean, I think that's very helpful advice. Maybe return to actually the government spending and the support that the government is currently giving to businesses and individuals across the country. Obviously, an unprecedented sort of interjection into the economy by particularly a Tory government. What do you think of the support that the government has announced for businesses and people in this crisis?
I think if we think about the job retention scheme, I think that has been well judged. I think there inevitably are problems rolling it out on a large scale. But I think most economists like me kind of think they got it about right. There will be some firms who receive funding who perhaps don't need the funding. But I think given the scale of the crisis, we can't just sit back and try and work out where the money should go at fine granular. I think we need to get out there. And I think that's been successful. When we think about funding for firms, it's a little bit less successful, I think, mainly because of two reasons. Number one, it's in the form of loans. And in the current climate, taking on a loan involves taking on risk. And so that's not as attractive as perhaps just giving money to firms would have been. And secondly, they're doing this via the financial system. So basically, business loans are going out via the financial rather than more. And so there is always the option for the government, if this is not really working, to short circuit the banking system and to give money more directly to businesses. They're very reluctant to do that, but that may become necessary.
Okay, and then obviously one of the key strategies to help businesses is the furloughing of employees. Perhaps you could explain for the audience in terms of what furloughing is, how it works, and how the government is intending it to work.
So first of all, let's talk about the scale of this. We're getting some information now on how this is playing out through labour markets. So what we now know that we didn't know until quite recently was over half of workers are still able to work. And this is actually a surprisingly large number. I would not have expected that level of success. So I think that's another interesting fact that we're getting is that at the moment redundancies, which is very encouraging. There are a lot of claims. There's over 1 million. There's 1.4 million new claims for universal credit, but those are not really coming from full-time workers. They're coming from part-time workers, gig sector workers, those kind of workers. Okay, so in that context, then it's only about 1 in 5, 1 in 6 workers who are getting finance through the furlough scheme at the moment. It's useful, but it's not covering most employers. And basically what's happening is that employers continue to pay workers while the workers are away from their jobs, and they're claiming 80% of the cost of that back from the government.
And do you think that's a sustainable thing going forward? I mean, the Chancellor has announced a support for at least, 3 months?
Yeah. So is it sustainable going forward? Yes, in the sense that there are, in effect, no limits to the amount that a government can spend. If necessary, if it gets very, very bad, the central bank can almost literally print as much money as necessary. Yeah. So there are no limits to that. So the issue more is how long can we sustain at the current level our productive capacity? If we think that the virus is going to be, if we're going to be in a 6-month crisis, then I think we can probably do it. We will lose a certain amount of our productive capacity inevitably, and inevitably that will be in sectors, it will be more heavily concentrated in the kind of hospitality sector, the restaurant sector, all of those kind of areas will inevitably suffer. And governments, there's a limit to what governments can do there. But if the core productive capacity can be kept going over 6 months, I think that is possible. It is very, very expensive, but it can be done.
Right. Okay. And what about obviously the magic tap of the economy isn't just going to switch on from nothing to 100% once this immediate crisis is over. What about employers and actually once the furloughing support has been taken away? How would they react? I mean, could there be significant increases in unemployment?
Yes, there could. I mean, basically, furloughing is there while workers are stepping away due to the public health emergency. And we all agree that is absolutely necessary. Now, as we gradually emerge from the lockdown, as the economy slowly re-expands again, clearly that's going to start earlier in some sectors than others. So pick an example at random. Something like an out-of-town garden centre may well restart within a few weeks. A city centre restaurant, it could be much longer term. Okay, so we really need to think about who needs more support in the longer term. Now, things like garden centres, we're all at home. We would like, those of us who are lucky to have a garden, we would perfectly happy to go to a garden centre. So you can imagine that kind of sector, given some support, can get itself up and running again. Other things, it's a more other sectors are in it for the longer haul, and really we need to focus our support there.
I mean, it's often said that the backbone to the British economy is small business. To what extent is small business going to be hardest hit by all of this?
I think inevitably small business has got a very quiet voice. Large business has a large influence in government. And also it's much, much harder to reach smaller businesses. So small businesses employing less than 20 people, it's really hard for people to reach those. They're often concentrated in the more vulnerable sectors. So if we think about hotels, restaurants, things like that, entertainment, a lot of that is driven by small businesses. So that is a hell of a challenge.
And I know you don't have a crystal ball, Chris, but if you did, if you projected forward 12 months from now, at which point hopefully the worst of this particular crisis is over, there may be some social restrictions still in place, but if you sort of forwarded to Easter next year, how would you see the UK economy and the wider global economy functioning?
Okay. So if I had to pluck a number out of thin air, and that really is what it is, I would say I would expect the UK economy to be something like 6 to 8% than it is currently. So it's a very sizable amount of money. So we will all be consuming less. We will be traveling less. There will inevitably be more unemployment. Workers will be more insecure. And as a result of that, we will be less willing to embark on large-scale expenditure. if you look at how expenditure patterns have changed from the crisis, there's much greater expenditure on relatively cheap household consumption. There's obviously much less expenditure on big ticket items. So that's the kind of so we can imagine in a year's time we are getting back on track. But really, I think we're thinking 5 years, 6 years. This is on the scale of a global war. Global wars, as we know, take a decade to get over.
Yeah, no, absolutely. And do you think the role of the state in the economy has changed permanently or just temporarily as part of this crisis?
That's a very interesting and also impossible. It's a very interesting question, but it's very, very, very hard to answer. Thinking about how attitudes will change is really hard to say. We know that from the experience of wartime, that when wars are over, people are much more ready to embrace large-scale state intervention, the National Health Service, all of the things that came in post-World War II. And we're all becoming much more aware than we were before that the value of a worker is not measured by the wage that they earn. So the really valuable workers at the moment are often badly paid, insecure, less well-educated workers. Hopefully, hopefully, as a result of this, we will understand more clearly the value of those workers and give them greater protection and give them more help than they have at the moment.
Okay, and my final question to you now before we finish is, what advice would you give to business at this point?
I would say hold on. I would say keep going, because this will pass. It may take a while for it to pass, but it will pass. And once things come back, things like hotels, things like restaurants, we're going to want to go to them even more than we do at the moment. More of us may be working at home. Our lives may become slightly more flexible, which is good in some ways, which is bad in other ways. But basically, we're going to want even more the things that we had before. So hopefully, please keep going.
Okay, well, I said it was the final question. I probably want to have one more bite at this, Chris, and ask you, what are the wider global economic implications of this crisis in the long term?
That's very interesting. One thing that's pleased me a lot in this is that there is a lot more of a collective view about things. Things are viewed as being global problems that need global responses. As we know, this pandemic has worked its way through Southern Asia. It's working its way through Europe. It's now working its way through North America. It's going to move down into the poorer areas of the world. Those areas are going to need a lot of support. In those areas, state institutions are less effective. States are less wealthy. So there's going to need to be a kind of collective effort by the developed world being willing to support necessary expenditure in the less developed world. So what I'm hoping is down the line we will have a much clearer view of much more of a global perspective, much more of an understanding that as a world we are all in this together.
Excellent. Well, thank you very much indeed, Chris, for your time today, and it's been a very interesting conversation. Thank you very much indeed.
Thank you, my pleasure.
Good. And now to the BLSI audience, if you found this particular conversation interesting, you will be able to find many, many more across different genres at the BLSI website, and the address is www.blsi.org. In the meantime, I'll see you soon, and please stay safe and stay healthy. Bye-bye.